Welcome back to the Make Space Boring Show. I am here with Raphael Roettgen, founder of E2MC. It's an investing company focused on space venture capital. Very awesome website. I recommend you go check it out. And we're here for our monthly review of what happened last month in space investing. Raphael, thanks for joining me.
Sure, Jason. It's a pleasure as always.
You bet.
So September, not a bad month for space startup financing. We had about 300 million in total in about a dozen or so funding rounds. Now, more than half of that was one Chinese launch company called Landspace. And as usual with those Chinese deals, that was pretty much a Chinese deal. So as you guys probably all know by now, there's sort of a divergence in that Chinese companies tend to have Chinese investors, and then the rest of the world, like American companies tend to have more American investors and so forth. But we keep seeing these huge Chinese deals. So there's certainly the Chinese startup ecosystem space continues to be very dynamic, which I suppose is good for the world at large, because it means that there's a lot of space technology also being developed in China. We also had a very prominent round in Europe by the Earth observation company, or I should say maybe a remote sensing company, to use the more general term, Iceye, based in Finland. And Iceye, of course, is very interesting. It's they're not focused on optical remote sensing. They're using synthetic aperture radar, which allows you to do things like see through cloud cover and see at dark. So very, very good round for them, $87 million. A lot of their existing investors came back. So yeah, congratulations to Iceye. We had another Earth observation company out of Canada, GHGSat, who track emissions, $30 million, also not bad. Another launch company, PLD Space, out of Spain, 8.3 million. So strong one for Europe as well here between PLD and Iceye. And then we also had another company from Denmark called QuadSat, who do satellite component testing using drones, also interesting business models. And then a few smaller rounds here and there. But yeah, overall, not a bad month. And of course, we're recording this, we're already halfway through October. So I guess, delving into some of the discussion, which we really should have the next time around. But of course, we can't not mention the momentous deal that was announced, which was the SPAC, the Special Purpose Acquisition Vehicle. The idea here is to basically list Momentous on the stock exchange by having Momentous being acquired by this SPAC, which is already publicly listed. Very interesting deal. Very aggressive, very innovative. I mean, absolutely congrats to Mikhail and the rest of the team, and also to the acquirers and their advisors. This is a very innovative thing to do. I mean, SPACs have been around for a while. The other prominent SPAC deal, obviously, in space happened almost a year ago now, when Virgin Galactic went public by virtue of being acquired by Social Capital, also a SPAC. But then I'm not sure that many people expected this to happen again at this magnitude and so soon in the post-COVID world. And again, relatively attractive deal terms for Momentous here. And if this all goes well, I think this is supposed to happen in the beginning of next year. So we also have to see how the market goes, obviously, the public markets. And we have a few events here and there, like elections in the US and so forth. But if the markets hold up and this deal can be executed, off the top of my head, I think Momentous would end up the day after the deal with around $300 million in cash on their balance sheet. And that's quite significant. I mean, obviously, Momentous, and I really have to give them credit here, Momentous is known for its in-space transportation capabilities. So this is starting with the so-called Vigoride vehicle, where you basically want to tow satellites from, if a satellite takes a ride share with, for example, SpaceX, and they kick you out at some location that's not your final destination, the Momentous Vigoride vehicle, and then later on other Momentous vehicles would come by, pick up your satellite, bring it to its target destination. But if you look now at their investor presentation, they've really done quite an interesting and good job of presenting a broader vision of in-orbit services, also talking about things like refueling, repair, and so forth, giving a couple of inspiring use cases like in-space power generation and mining. Now, many people will say, okay, well, we have to see, and we have to separate the fantasy and look at the time from the reality and look at the time frames. That's all totally fair, but it's still refreshing to see a company put this sort of vision out there to public markets investors. because it's good for public market investors to see this kind of vision of the space industry. The other thing I'd like to say with the $300 million on balance sheet, I mean, there's a concept in the financial markets which originally pioneered, I think, by George Soros, so a very prominent billionaire investor. But it's basically reflexivity, which means that fundamentals can impact your valuation or the performance in the public markets. And that most people understand. But then there's another feedback loop, which is basically public markets. What happens in the public markets goes back to impact your fundamentals. And this, of course, could be a prime example of that, because the mere fact that Momentus may end up with so much cash, of course, it could give them a tremendous advantage over other companies because they can use that cash and build out their capabilities. So it'll be very interesting to see what happens with that, how they're going to use that cash, how other people who are playing in orbit services are going to react, and so forth.
Well, that's great. I'm really excited about Momentus. Followed them for a long time. They're, in my mind, the most real big space company out there. They have a lot of capabilities. Dr. Joel Sercel was on the show, one of my early guests, talking about Honeybee, and we were talking about that, the orbit movement, and the pace at which they work at there. It's like, oh, we just hired another 60 engineers today, right? And they're going through raw materials like crazy and inventing stuff. Plus, they just brought on Fred Kennedy, right, former SDA guy, and at a launch company before this. So when I saw that move, I didn't know the public announcement was coming, but I thought, okay, now they're really getting serious here about government integration and creating even more capabilities. So I'm very excited for them. Raphael, I'm going to link to the article on spacewatch.global that you make every month as well.
No, I think that's it for this month, and I'm sure we're going to have an interesting discussion again next month. By the way, I'm sure I'm happy because as always on these episodes we're doing here, I can only talk about the public stuff, but because of our day-to-day work, I'm aware of the private things which are not yet announced, which are going on. And let me tell you, in the sort of post-COVID world, there is a lot going on. So it's actually looking quite exciting again on the space financing front. Awesome.
Yep. Space is not dead. People tend to focus on launch in the public sphere because it's something that's visible, but there is a lot more going on. All right. My guest has been Raphael Roettgen of E2MC. Thanks for doing this.
My pleasure. Take care.